All right, everyone. Today we're going to look at SE stock. I saw this on Twitter somewhere, thought it looked kind of interesting, and I don't know anything about it, which is my favorite type of stock to look into. So we'll just look to see real quick what it is, what it does. Consumer internet company, e-commerce, digital financial services. Looks like they got a few segments. I've never heard of those three. Personal computer online games, mobile games for the global market, esports, and other entertainment. All right, cool. Operates in Indonesia, Taiwan, Thailand, Singapore, Malaysia, and the Philippines. Okay, so we'll look at their latest earnings here. And like I always like to do three things. Like to look at the latest earnings, the current valuation, and then few other things, stuff like outstanding shares, maybe short interest, insider buys, those sorts of things. So what we can see here is, they got the two columns inverted, but you're looking at pretty big sales growth. 38% sales growth, or gross margin growth right here, and the sales growth is also 38%, so really good. It looks like they have, oh no, sorry, I said that wrong. The total sales growth, they have two revenue sources. It is 38% year over year. The cost of revenue, went up slightly more percentage wise, not by much, and it may be about the same, so I'm not super concerned. And the gross profit is up 36%. So pretty good. That's pretty solid growth year over year. Let's see some other things. It looks like, however, the sales and marketing went up about 350 million. So they had to spend quite a bit. They had to spend about as much in sales to get the amount of revenue growth that they got, which it's not a bad thing, but it just means, maybe a lot of this isn't organic growth. Almost no G&A expenses are the same, and then provision for credit losses went up quite a bit. That's interesting. And then research and development is down a little bit. So you are now looking at the total operating expenses, which went up 28% year over year, which is slightly less than the gross profit percentage went up. So that's good. And then you got your operating income, which went up 84% year over year, which is great. That's a big improvement. That means overall that their efficiencies actually are doing pretty good. I want to see. Yeah, that means that their growth is outdoing the operating expenses that they have. So that's great. Let's see. And the net income growth of 72%. Wow. That's pretty good. That is pretty good, brothers. Let me see. And we got some breakup here. Let's look at the balance sheet real quick. I'm not super worried about the balance sheet because they're making a lot of money. But where is it? Okay, here we go. Tons of cash. How much debt? They have their debt went down year over year, and it's more than covered by their cash. And then they have a lot. Look at this short-term investments. Holy cow, they got a lot. So yeah, the balance sheet's not a problem. So, okay, looks like a pretty healthy, good, growing company to me. I'm not seeing any concerns here, but then we'll look at the valuation because maybe a lot of this is already priced in. So, market cap of 52 billion. So that's a lot. That is a lot. And if your net profit is 1.58 billion, you got to ask yourself, do you really need 520 billion to make a whatever? I think it was like $1.5 billion every year. So that's a pretty healthy valuation. We'll check this PE ratio to see how it compares to their peers. Um, uh, the PE ratio for, we'll just ask ChatGPT generically, do you think SP stock is overvalued based on its current PE ratio? Okay. So it's a little higher than broader market, above many mature tech peers. Growth has slowed. If the growth slows further, the multiple is too high. And then the PEG is 1.3. So this is basically saying the high level takeaway is that it's not undervalued, it's not really overvalued, it's maybe slightly expensive, but nothing terrible. So that's important because even though this looks like a healthy, good company, you gotta ask, do you really need a 52 billion market cap to make $1.5 billion? And if they keep growing, that's a good question. So, that's worth noting. We'll look at a couple of other things. What upcoming catalysts does SE stock have in 2026? Okay, so just growth, which a lot of that's coming from their sales spending, an AI partnership, Garena is a gaming rebound, fintech scaling. So I'm not seeing anything that really stands out. Are insiders buying stock? That's not good to see. Overwhelmingly selling, but let's just see, because maybe if they have stock-based compensation, it doesn't mean anything. And if they're just selling small portions of what they have, it's not a big deal. That's a pretty big sell. Scheduled months in advance. Not panic selling. Selling pressure. CEO did a small buy. Okay. So not a lot of buying. So I was just look one more thing. How many institutions own stock? Okay, so that's a lot, about 60%. So, interesting. It's interesting stock. My kind of main takeaways is it's healthy, growing company, definitely growing. My other takeaway is that the valuation doesn't scream really undervalued or overvalued. And another kind of takeaway is, some of the insider activity. But interesting stock. Let me know what I'm missing or what you think if you do follow or own this stock. I love to learn about all these. So yeah, let me know. And I will see you in the next